Welcome to the Journal podcast from the Chartered Insurance Institute, a place for thought-provoking discussion from the world of insurance and beyond. I'm Michael Bond, Social Media and Production Executive at the Chartered Insurance Institute. Today's episode, we'll be talking about specie insurance. We'll be discussing what it is, the types of risks that it covers, as well as organisations that may take this out, and much, much more. I'm delighted to be joined by our two guests today, Akash Singh, Senior Exposure Analyst, and James Glynn, Head of Marine and Class Specie Underwriter at Antares. Thanks both for joining me today.
Pleasure.
No problem. Yeah, happy to be here.
Thank you for coming. So, to begin with, for our listeners who may not be familiar, could you explain what specie insurance is?
Yeah, I mean, specie is a really weird, archaic word. And effectively, specie means something that's intrinsically valuable. So, precious metals, gemstones, cash, stamps. We talk about specie insurance, but actually it's wider than that because we're insuring fine art, and fine art is not technically specie. If you cut a painting up, it's not worth the same. But it's a similar type of item in that it's high value, it's portable, and things like jewellery, that's somewhere between the two. It is made of specie components, but the value of a piece of jewellery can transcend the individual component values. So when we talk about specie as a shorthand, it's probably more accurate fine art jewellery and specie, and there's always a bit more besides that. But we've got four main areas, as it were. So the first area is fine art, and fine art can be anything from the commercial side, whether that is a gallery, a dealer, an auction house, but it's also things like museums, personal collections, and it isn't just paintings. It isn't just paintings or sculptures or high-value antiques. It's collections, and particularly for wealthy individuals with big collections, different people are into different things, so it might be that it's artwork by a particular artist or a particular style. It could be that they're into stamps or coins, rare artifacts like that. But some of the younger collectors these days, we will see things like baseball cards. We will see Pokemon cards, even, Magic the Game, things like that. We have some people that collect fossils. Some people that have huge collections of classic cars, and all of those things can be considered within the fine art area. So fine art's the first part of it. The second part is jeweller's block. So this is the commercial part of the jewellery industry, and that's anything from diamond dealers, manufacturers, wholesalers, retailers that whether that's your small local couple running a small jeweler to some of the large global brands that you'd be familiar with. So that's the jeweler's block side. Where people have got collections of jewelry, that actually comes under fine art typically. It goes into that sort of collection side of things. Then the third area is called cash in transit, which kind of is self-explanatory, but less so these days, but we all carry cash. And the cash has to move around and through the system in various ways. Someone has to put the money into the ATM that you withdraw the cash from. When you buy something in a shop with cash, which some people still do, that cash needs to go from the retailer to the bank. So the cash in transit industry really is the grease in that mechanism that moves the cash through the system. And, as you can imagine, cash is very desirable for people to steal. So it goes by armoured car. There are obviously guards escorting it. And depending on where we are in the world, what the laws and regulations are, it might be armed guards or it might not be. But they'll do things like, as well as the collecting, they'll process that cash. And we are there to ensure them and help mitigate the risks that they see and face. And then the final area is the catch-all. There's always a catch-all, but it's general specie. In its pure form, this is things like gold in vault, things like gold mines, diamond mines, all of that side of things. But it could be things like a stamp dealer, a coin dealer, things like that might fall under general specie. It could be when countries buy new banknotes, because countries reissue banknotes periodically. There are a few companies that make those banknotes, and then those banknotes need to be shipped to the countries that need them. And that might go through as general specie, rather than what you'd perhaps imagine as cash in transit.
I think additionally to that, what you would, like James has said with like collectibles and stuff, specifically is what people also desire, right? People grow up and they like private collections. They like you said, they like cards. They like Pokemon cards, stuff they couldn't really buy when they were younger. So they have some source of income. They want to get it, right? And we're now looking at a lot of intrinsic values for like very specific items. So I'll give an example of, the most expensive car that was sold was the Mercedes Benz, right? 1955 SLR, Ullenhau. And that was sold for around 135 million euros. Wow. Right? And you're now going to start seeing increases in these prices for these particular cars because people want to own these cars, right? They're collectibles. And so that brings across so many different risks, specie risks, from an exposure management perspective and underwriting perspective, because you got to think, okay, from like a dealership, for example, if someone needs to buy that or someone has bought it, from the place of where they bought it to the destination, that's also a risk. That's a transit risk, right? You're insuring the body of the car. So from one place to another place, that entire journey is a huge risk there, right? So it's understanding the nature of it.
Yeah, I mean, if touching on the classic cars is always an interesting one, and for a long time it was a Ferrari 250 GTO that was always the most expensive, and the values they've shot up in the sort of 15 years that I've been underwriting, from sort of 15 million to sort of 70, 75, and then the Ullenhau broke all records a few years ago. But whereas Akash said, we're just covering that sort of the fine art, as it were, the body of the car. People still need to buy the normal motor insurances, etc. But as you can imagine, you probably couldn't phone your normal car insurer up and ask them if they'd be okay covering your Ferrari worth $50 million. So that's where the fine art specie market can come in.
I think this is a question for you, James. Oh. And it's more so, how do you see, or obviously you've been in the specie industry for a long time now, what have you seen in terms of the progression, like the more prevalent risks these days? Obviously back in the day you got private collections and museums always holding artifacts, but I think now you start to see new risks, and you might have a better idea then.
Yeah, I mean the sort of the core bits of specie have remained for a long time. The jewellery side, cash has remained, albeit certain places in the world we see slightly less in use these days, but it's still a need and a requirement. And some countries are very much cash driven. Museums have existed for a long time, and collectors of fine art have existed, but we have seen those younger collectors are not necessarily all of them as into the traditional collectibles. So whether it's, as we've said earlier, some of those slightly stranger kind of collected cards, or whether it's things like comic books, or there was a very brief dalliance into the whole NFT side of things, which raised some big questions, but sort of waned, and that's not really very prevalent anymore. But we've also seen some risks around things like some high value cargo, because like most classes of business, not everything neatly fits into a particular box. So we will have overlap with the cargo market on some risks. We will have overlap with the FI, the banks, that side of things, on some risks. We'll have overlap with the property market on some risks. And we've seen things like graphics cards that are high value, and some high level excess layers for that. We've seen some people in the market write things like crypto mining rigs and that side of things. And big news at the moment is all the data centers. So those are two areas that I think there's some talk about potentially having separate risk codes for those. And I think those are looking like there will be specie risk codes as I understand it, but that's still to be agreed. But that's a sort of new area that we've been seeing, and people are sort of looking to see how we can help our different insureds and people out there with those kind of exposures and required levels of insurance that they need and want to buy.
I definitely agree with that. And lastly, I just wanted to add it on the data center points. Obviously it's a prevalent risk coming up to this day and age, and I think that's an exceptional point, because with the use cases of AI now, every business, every firm obviously wants to use AI. The increase of it now means that there's more core processing units and also processing powers of actual computers and laptops and so on and so forth. I mean, you need massive data centers to run it, right? Yeah. You definitely need it. So there's an alignment, and you see a linear progression in terms of, more data centers, increase in AI.
I mean, it's very much at the nascent phase, I think, for that at the moment, and it's still a very, very small part. The vast majority of what we're doing for Specie is the fine art, is the collections, exhibitions of art, is the jewellery, the cash in transit, etc. And I guess one of the things that makes Specie slightly different from some of the other classes is people want to steal a lot of what we're insuring. Now, you do get thefts in cargo, you get thefts in other areas, but by nature of being high value and portable, most of it, not all of it, but a lot of it is very desirable as something to steal. And some things are easier to sell on, fence on the black market. So cash, obviously, is very desirable, particularly where it's one of the more major currencies. US dollars and euros is very easy to kind of move around in that sense. But things like gold, you can get good return value, as it were. You won't get the full value of it, but once it's been smelted down, it can't be traced in the same way. Diamonds and gemstones, they can be resold as well. Paintings, we get less theft. Artworks are stolen, but by and large, it's not as big a risk as it is for the other elements. And that is because a painting's worth what it's worth because of the provenance, because of who it's by, what it is. And if you break that provenance, you break the connection, then it doesn't have the same value. So when we do see paintings stolen, sometimes it's opportunistic theft, obviously. Sometimes it's to be ransomed, and that there have even been incidences of criminal organizations that have stolen paintings, and then, if they've ever needed to, they can offer it up as some sort of part of a commutation of sentencing or something like that. But it's always a risk. But for paintings and things like that, theft isn't our primary concern.
That's a real range of things there in specie insurance as well that you probably don't associate with it, or it comes into lots of different areas that you've touched on there. Some of the more common ones where you think of gold, coins, even cars to a certain extent. It makes me think I wish I should have kept my Pokemon cards, to be honest with you, because they would have been worth so much money now, and that's...
I mean, it depends, though, because they're only worth something if they're pristine.
Of course.
Yeah, because it's been graded now, right? So you've got loads of cards that's been graded, and there's insurance for even the grades, right? There's insurance for even grading cards. Magic the Gathering, you've got Pokemon cards, you've got Yu-Gi-Oh cards. I used to trade them when I was at school. Yeah. Right, and I probably traded away millions now.
Yeah, as I say, those are interesting because they're completely not what you'd think of, but they are a small part of what we do. But they're the sort of ones that I guess you wouldn't think about automatically.
Yeah, I definitely wouldn't think about those. It's really surprising, but really, really good to know as well. And You touched on a little bit there about the differences between things like commercial property and cargo, where these are very high value specialty items that you would be insuring. What types of businesses, organizations, or individuals, for example, would be taking out this type of insurance, would you say?
Well, for the individuals, they're fairly wealthy, to extremely wealthy, because, whilst we might have, and we do write some risks that might be relatively modest personal jewelry collections in our terms, they're still in the sort of 100, 200 plus $1,000 worth of jewelry. So you've got to be fairly wealthy to be in that fortunate position. And of course, if you've got a collection of art in the millions, you're clearly wealthy. So wealthy private individuals, clearly. And then on the fine art side, it's the museums, that do buy it. It is the auction houses. It is the galleries, the dealers. Anyone that's commercially involved in fine art needs to have insurance in place, because artwork can be worth a lot. Not all artwork is worth tens of millions of dollars. Some artwork is worth much, much less. And we have the full range, really, in terms of values. And the values aren't static. They will change, as trends change. If an artist, a living artist, passes away, their work often becomes more valuable. But a whole host of different things will have a ripple effect and change the value of artwork. And when you see in the news that a painting has set a new record for sale by a particular artist, that has an impact, because that can push the value
It's like provenance, right?
of everything else. Well, the value of art, it lies in the eyes of the beholder, almost. It is to an extent set and agreed upon by a market, but if it's a particularly fine example of something, and you've got a number of very wealthy collectors that all want that one item, then potentially, the sky's the limit as to what they might bid for it.
Yeah, definitely.
I think that's really interesting, though, because if there's items that have a less strict price, a less set price, that are more open to interpretation, even things, let's say, an auction house, for example, there's no set amount of money there on those items. They could go more and more and more. How would you assess the risk for items that don't necessarily have a rough or a set price, as it were?
Well, I mean, on the auction side, they tend to give a range, an estimate. And, obviously, if we're insuring the auction house, we will be covering based on what they might be contractually liable for, because they've come to an agreement with the person that's selling the item. And where we haven't got that, it will be something like the mid-range estimate for the auction. So we'll have an idea of those kind of exposures, and we'll look at, in terms of, we use different types of exposures for different things to kind of measure it. So whether it's, on the cash in transit side, it might be largely driven by things like their revenue or the actual face value carryings that they do in a 12-month period. Whereas other exposures in other different types of risk will look at specific things. A wholesale jeweler, it might be how much travel they're doing carrying jewelry, as well as exhibitions that they're going to, as well as what the exposures are in the different locations. And we'll use all of those different factors, depending on what it is, to then come up with a price. And then that's where the beauty of the sort of Lloyd's syndicated model kicks in, because there can be consensus and there can be quite a bit of difference between how people rate a particular risk. And the brokers, their skill is in knowing those markets that have appetites for particular things, knowing who might be more competitive on that aspect, who might give wider coverage here, and they can really act as that intermediary to get the best deal for their clients.
Yes, and I think now, just if you move away from the other side of things in terms of like exposure management, where we take the data, right? We're looking just exactly what James has said, is understanding the nature of the risk, right? Where the asset is. If you're looking at gold within a bank, right? We know that, you know, it could be susceptible to many risks, but is it going to be susceptible to a natural catastrophe such as a hurricane, right? If it's below ground floor, probably not, right? But then a painting on a wall, right, on a fourth wall in a building is definitely more susceptible to it. So it's understanding the difference.
Yeah, I mean, less susceptible, but you could have, you know, if you got a hurricane, you know, flood and wind-driven flood and water is often problematic. Not all vaults are necessarily underground, but if you have got one that's underground, you know, water can always find a way in. And with that sort of flood water, it's not clean, pure water. So whilst the gold might be safe and fine, you might still need to pay a loss to clean it because it's currently not very sanitary after that side of things. So there's always something that could
Yes.
be a claim that we might face in that regard. But you're right. Generally, hurricane and vault type risks isn't one of our main concerns. And generally, where our sort of exposures are centered in the specie world, we're less cat exposed than some classes of business. And generally, because of the nature of what it is, they tend to be in quite well protected buildings on the whole.
Yes.
I mean, museums can be a little bit less because often they're very, very large buildings sprawling over a large area that are quite old.
Yeah.
And you know, that is something that we need to be mindful of. But it depends on the country, it depends on the collection, it depends on everything.
Because LA, you know, for example, has buildings obviously, but they're very well retrofitted, right? You know, the building itself, the structure itself is extremely well made, so it is there to be durable, right? For a lot of these, obviously not completely,
No.
but somewhat it needs to be, right? So yeah, it's just really understanding and I guess mitigating, right? Mitigating risks like having security alarms in some cases. In some cases, obviously, like the building itself, the structure is understanding, obviously, you know, that risk at hand.
Yeah, I mean, look, it's everything's a balance for us because, you know, you'd love to have security in museums to the point that no one could ever get near anything, but that's not the point, is it? You don't want to go to a museum where you can't get anywhere close to the art. So it's finding that balance. You know, if it's a jewelry retailer, they've got to be able to trade. So, you know, whilst we want security in there and in place, it has to be the balance so that it isn't getting in the way of them actually conducting their business in a reasonable way. But part of our job is one, knowing the different kind of drivers, but also understanding what the risk is, the nuances of that particular one, and where it is geographically, because there is a difference geographically in the types of risks, losses that we see. And it can be small things, it can be trends of losses, it can be particular gangs that are in operation, or it might be just because of how the laws are operating in that country that it makes certain things more likely.
Do you have certain hotspots then that you typically insure, certain areas, maybe luxury areas come to mind are Dubai, maybe Switzerland as well. You mentioned LA as well. Are there particular areas or certain hotspots for specie insurance, would you say?
Yeah, and it kind of it depends which of the subclasses you're talking about, really. So, so on the sort of jewelers block wholesale side, obviously they're based around some of the sort of traditional site locations. So, you know, whether that's New York, Dubai's come in, but Antwerp obviously is a big area. India's been on the up because they do a lot of the sort of processing type of risk and the manufacturing side. But we've got those kind of main hotspots in those traditional areas. For the private fine art side of things, it's driven to a large extent by where the very wealthy live. So there is a concentration, obviously, out towards LA. You do get places, like whether that's Monaco or whether that's Dubai, but I'd say LA is probably one of the bigger drivers, together with New York and the US generally. And then for things like retail jewelers, that's global. There are retail jewelers in most towns and where have you. That's not necessarily limited to a particular area. Museums are most places around the world, and the same goes for fine art dealers and galleries. So it depends what it is. But yes, we'll see different types of risk in different places.
Because what you'll see is, obviously, there's events going around in the world. You got the yacht event in Monaco, right? You got all the yachts coming together. That's a massive accumulation of risk there. And then you've also got like New York with the trade art in massive market in New York. And then obviously, like you mentioned, with Antwerp, with gemstones and how it is with diamonds in that specific area. So it is, like you said, there's events going on during the world. It's more so concentration of risk as well, simultaneously with, it could be in one place and another in terms of, if you look at the period and annually, but there are, it could be like in June or July where there's one specific like market that's going on, right? Where everything is accumulated together. So you also have to be mindful of that kind of aspect, right? Not necessarily is everything is static all the time. The variables do change.
Yeah, we do. There are big fine art shows that take place annually, and similarly with jewelry trade shows that take place. So we regularly kind of monitor that and try and keep on top of the exposures that we have there. But it's part and parcel of how they're trading and selling
Yes.
selling their wares. So it's something that they're always very keen to make sure that they've got proper insurance for, because whenever you're moving items, you want to make sure that you're insured for it.
Definitely. Do you think social media is a massive application or influence to some of these markets? So I'll give you an example of YouTube is very huge, and there's a lot of jewelry shops and a massive industry in New York. I know that for a fact because it's quite prevalent on YouTube. That, from what I can gather, influences a lot of like youth to go there and maybe trade because they think they've got a chance of trading. So that eventually would increase the market, or do you think that may not be the case?
Look, I mean, it's these are luxury items, and the driving force behind people wanting to own them is in part because of marketing. It goes right back to when the first bit of marketing that set out how much money you spend on an engagement ring, which I think started out at a month's salary as a marketing thing. And I don't know, I think someone told me the other day they use a number of something like 3 months, I think. But
yeah, that's the traditional time. Yeah, 3 months was what we always used to be told.
But that was a marketing thing, originally, and that was a month originally.
It'll be 12 months soon.
Yeah. I think that was also before a time where we have more lab-grown diamonds now versus real diamonds, so the cost of those ones would potentially have been higher than they are maybe today.
So lab-grown diamonds is a really interesting kind of area, right? Because they're not fake diamonds. They've just not been formed through the sort of geological process, but they've been made using a lot of pressure and a lot of heat.
Yes.
And it is carbon, whether it's a natural form diamond or whether it's lab grown. And the price differential isn't that big anymore. Lab grown diamonds are slightly cheaper, but the differential isn't as big as you think.
Yeah, that I definitely agree with that. That's from what I've seen as well, and the market definitely shows it. All right.
Yeah.
Well, I mean, that all sounds absolutely fascinating, really, and there's quite a lot of material there. You touched on, I mean, we've touched on at the start about a few different areas that maybe we wouldn't have thought about, wouldn't have known about potentially, that come under Specie, and maybe people have some misconceptions about the area, or they may think, oh, it's just doing this, it's just doing that. From your experiences, what's the biggest misconception you think you have in Specie insurance?
I mean, I've been involved in Specie for like the best part of 25 years. So maybe you answer that one, because
Yeah, I guess because there's new trends, right? There's new stuff that comes up, which is quite prevalent these days, and we're looking at a lot of, not necessarily a lot of people, but people are now saying, oh, a species just fine art, right? But that's not the case, as James has spoken about previously, and aforementioned, is there's so much to do with it. You got banks with federal reserves. You got gold that's in vaults, right? You got exhibitions. You got museums, right? Paintings obviously comes under fine art, but then you've got private collections.
yeah.
Right? You got cars. So the collectible market obviously is increasing ever so much in this day and age. And like I said, social media is a massive influence, and it's marketing. Marketing is absolutely huge. Right, you've got loads of different international gangs like Pink Panther that they end up obviously trying to steal. Right, you got cash in transit. Right, Brazil is a massive one. It's a hotspot for cash in transit, or even for armored vehicles to be, instead of robbing an armored vehicle, maybe at the end of the destination, people are actually willing to do it during it.
Well, I mean, as I said, you get different types of crime in different places, and we see trends in it. I mean, security can never fully prevent someone that's sufficiently determined, and it is always been a bit of an arms race almost between new improvements in security and protection against new innovative ways that people that really want to steal it, finding ways to get around it,
Yes.
or attacking a different weak spot, as it were. And we did see some big losses in the market in Brazil, and we saw lots of different types, whether that is there was a phase where it was very much all the rage to dig tunnels, and some of the criminal gangs would effectively have backers, because it's quite a large infrastructure investment for them to dig quite a lengthy tunnel right the way underneath the vault, and then attack from below. And various different defenses came in against that, so they found different ways to do it. But depending on some of the laws in the country, depending on some of the sort of particulars about that risk in that particular geography, tends to lead to different types of losses. And people are always trying to find different ways to mitigate against that. But fundamentally, it comes down to security measures take time. They take time away from the criminals, because they have to spend more time to circumnavigate them. And the second thing is, through monitoring and alarms, we try and take that time away from them, because we try and limit what their window of opportunity is, and we try and make it take them longer to actually get past those defenses. And you'll never, as I say, fully eradicate it, but you can make your risk less attractive.
Absolutely.
Yes. So an example is the Hatton Gardens incident, and if you look at the actual facts of it, it took them 2.5 hours to get the jewelry, the cash, everything that they really wanted to outside, right? To get outside of the shop itself. So like you said, it's time, right? It's not necessarily a deterrent, because that's what a lot of people think. It's deterring a lot of people. It's more so just taking time away from it. And it's ever evolving in terms of, like you said, with the tunneling, right? Then people will find other ways, and that's just the way it is. But then there's security measures in place, and people will mitigate it.
Yeah.
Right. It's just ever changing. But that's the reason why Specie is so interesting, is because you have these different type of risks, and knowing about it, you may not know about it today, but tomorrow there could be a different risk, right? The Kit Kat story, we that's what's going on. That was only a couple of days ago, right? Who would want to steal Kit Kats?
12 tons of them as well.
Kit Kat, right? In transit, and you really wouldn't think of it, but like I said, it's prevalent. Obviously James knows it inside out, but every day there's a new risk that's going to be on someone's paper and on the news, so you just have to be aware of it.
Yeah, I mean, as I say, it's sometimes there are some really horrible losses that happen, and it is something that people will go to great lengths to try and steal at times, and sometimes that sadly does mean that people do get killed in some of these attacks. So it is incredibly serious and tragic, some of the things that happen, but you do get losses that you think, well, I could definitely see that in a film. One of the few downsides of being involved in Specie is I am very bad now, as my wife will tell you, to watch some of those films with, because you point out various things of, well, they would never have been
not
asked.
real.
Yeah. No, absolutely. I mean, I appreciate Kit Kat is not Specie insurance as such as chocolate bars, but it did get me thinking, the idea that in transit, things can obviously get stolen, not in a fixed place where you have, he talks about Hatton Garden, and it's obviously a fixed location. Antwerp robbery, I think that happened not that 20 odd years ago, I think it was. Fixed location where it was, security systems in place. When something's on the move and in transit from one place to another, are you more than just ensuring the journey and A to B? Is there more that goes into that? Is there more looking at each step along the way, the route it potentially takes to get to this location? Does this all come into the underwriting process and the assessing the risk?
Yes, but it depends. So most of the policies that we're writing are annual policies, for a company that's doing that sort of thing on a regular basis. And then we have an understanding of what their modus operandi is for that type of thing. But that's not to say when you do get one particularly large, high value transit that's like a one-off, we might have far greater level of detail that we've had to check something. It could be that you've got a particularly large, unwieldy load type thing, and then we have to sort of review and see how that actually is going to be done in practical terms. But on the whole, it's more about just understanding what the level of security and what their practices are, and then we'll use surveyors as well, who will go and check and look at a risk and come up with some recommendations, all as part of trying to improve the risk management for the insured and make it a better risk for us.
Fantastic. Yeah, I mean, that all sounds really interesting and explains a lot of that. Just to sort of bring this podcast to a close, I wanted to talk more about both your experiences working in this sector as well, very specialty line. What would you say, start with you, Akash, what would you say you both enjoy the most about working within the Specie insurance area?
I think the uniqueness of every risk, right, as we've spoke about in this podcast, is multiple different examples, right? Each and every example is different, right? You've got cash in transit that's dynamic, time bound, right? It's not from one area in one area specifically. You're going from one destination to another destination, right? And then you're comparatively looking at artifacts and sculptures in a particular area in a bank, or it wasn't necessarily a bank, but more so a museum, right? So and that is static. So it's understanding that, and it's relatable in the sense of people have very specific enjoyment and desires of, let's say, collecting cards, right? So everything is there for you. It's the attention to detail of the new upcoming risks as well as the existing ones, right? And geographically, every place is different. You got LA with the wildfires, right, in 2017, right? And then you got comparative, you look at windstorm that could happen in a completely different state, right? So geographically, industry specific. If you really want to delve into Specie, from my perspective, there's so much attention to detail that you're not picking one particular focus in terms of the risk. You're really assessing all the way from, in terms of someone buying it, all the way until the actual valuation, right? It could be the case. You've got art appraisers, right, that come in and specify what the valuation could be. You look at art and you've got multiple different buyers, understanding who is the purchaser and why they purchase it, what's their motive, right? That influences price. And ultimately influences underwriting and then exposure management and premium. So from my perspective, there's a lot to go on. I haven't been in the industry for that long like James, but from what I gather, it's an ever learning world, right? It's like world building. You just don't have a limit to what you can actually learn.
That's fantastic. Yeah, like no day is the same as well. It sounds like there's everything different happening on lots of different days. What about yourself, James?
I'd say probably the variety. I mean, it's since COVID, the Lloyd's is a slightly different place, and it's a mixture now in terms of electronic trading as well as face to face, rather than it all being predominantly at the box. But it's the fact that you can go from sit down and 1 minute you're thinking about a fine art collection in New York, the next breath you're thinking about a cash in transit risk in Jamaica, and then you're talking about a safety deposit box company in Dubai, and then you're talking about a small personal jewellery collection in Monaco, right? So the variety, and it's always different, and they're always the similarities from what we've seen before, but everything's always slightly different, and it's a competitive field. So people are always trying to push the boundaries in terms of whether that's the rates or whether that's the coverage. It tends to be more the rates, but it's always different, and it's like lots of different classes of business. You sort of build your career within that particular class, and one of the great things about the Lloyd's environment is we're all together. We're so close together that I know my competitors. I know the other Specie underwriters. I know the brokers. We all know each other, and in the same way that we were saying, you get that variety of risks. Well, I can look at one risk that I'm working in collaboration, as it were. We're on the same part of the same market with that insurer, and that insurer. And the next conversation, one of those same insurers have just undercut me on a renewal to me and won it off me. And then the next moment, I've won a risk off a different insurer. So, I've always sort of viewed it that it's we're like friends that play competitive sport.
Yeah.
Sometimes we're on the same team and sometimes we're competing against each other, but it's been a really nice and friendly industry, I'd have said, for my career.
Brilliant. So really engaging as well. That's fantastic to hear.
And I think just on that, I think from my perspective is to be able to work with individuals like James, right? To have that knowledge there. It's a plethora of knowledge in Specie, to know it inside out and to learn from someone who can provide, growth in your career, right? There's development there, right? And being able to see, like you said, perspective of the underwriter, of the broker, and the whole industry itself, right? The whole industry itself has so many different aspects to it, but just like James mentioned, is competitive. Like you want to be involved because you're learning so much. But Specie, obviously, unlike other businesses, or other potential line of businesses, you're looking at it with a scope and a lens, a very fine scope, right? And I believe James would agree with this on this point. Is the ever-changing world is there, right? Insurance market is not going to stop anytime soon, and the competitive is only going to increase. And you want to be involved because you can make that difference.
Yeah. No, I'd agree with that. But equally, I know people that do different classes of business. I look after some other marine classes as well now, of course, and I know that they all feel the same way about their own classes of business. And it's one of those things that, you know, if you're at a party or something and someone asks you what you do for a living, I mean, nothing stops the conversation quicker than saying insurance. The only time it tends to then carry on is if they ask if you can help get them cheaper car or home insurance. But that's fine, because we know that actually within the industry there's so much that's intriguing and interesting and that we can get involved in. It's almost like every job has, you know, the interesting bits and the boring bits. And, you know, you could be a marketing executive for such and such, and that sounds really glamorous, but maybe a lot of your day-to-day is not that exciting. Well, we're not using any of the excitement quotient in the insurance title, and it's all actually in the day-to-day job. Yes. So, yes, it's been an enjoyable 25 years, put it that way.
Fantastic. That's a really great way to end it as well. I think it's been really interesting to hear about all those different areas within what seems like one topic is actually several different areas within one. A range of different types of risks that you cover, different organizations that would take it out for different reasons as well. And hopefully we can bring a few more people into this sector as well and sort of grow the area a bit further as well from this interesting conversation. So Akash, James, thank you both so much for joining me on the podcast today.
Thank you very much.
Thank you.
I appreciate it.
And thank you for listening to this episode of the Journal Podcast. You can find useful links in the show notes and related articles on the Journal website, along with further podcasts, which you can also log as CPD with just a click of the button. Please do like, review and subscribe. And until next time, goodbye.